Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be talking about a big question that comes up a lot in, are we trending or are we correcting? Right? What is the market doing at any given point in time? Now, when we're in a situation where we have to ask ourselves, are we trending or correcting? The first thing that I like doing when I'm trying to dissect what's happening is trying to figure out where we are in the slightly larger picture. Now, let's assume for a moment that I can't move the chart. So where the chart lands, that's all I have to work with. That way we can't really do anything else. So as far as the trend is concerned, from the bottom left to where we are now, the trend is going up. And if we're looking at this from a confirmed swing standpoint, that might even give us a little bit of a different idea in that the swings would be... well, we really don't know if there's a low there, so the only one we can work with would be here. We start off of the highs, which ended up, actually, that was higher, down to a low, back up to a new high, and now we've got a relatively decent starting point. We can continue further forward from this, and confirm swing, obviously, move to the upside. This isn't really that big of a pullback, enough for me to really consider it, so I'm going to go a little bit further up. And actually, that was the high here. Got the larger pullback. Larger move up. Again, not enough of a pullback in here for me to consider it, but when it rips up here and then dives down, that's good enough. And then another move down, and after the up. And from here, this is where, again, is this a big enough correction to consider it? I think it's okay. It kind of fits the bill. It's not the best looking thing in the world. The other consideration would be that this would be one large leg. Now, from a trend perspective, what is something that has to maintain on a trend? We've got to be making higher highs, higher lows, or lower highs, lower lows. We've got to keep that trend going. And when that starts breaking away, like here, where this has changed, that doesn't mean that the market is done going up. That doesn't mean that the trend is over and then we're going to put in a top and then tank down in, 1,000,000%. What that means, though, is that it's more likely in typical market rotation that we had our upcycle. Now we're going to begin going more into a range. Now, the range could look a little bit different. It could be an up-angled range if the trend is strong enough. Or if the trend is weak enough, it might even be a downtrending, similar to what a flag may be. Context is everything here, but just a few considerations when we're looking at this. When I start seeing this break down, this is giving me a clue. Even if the market does go back up to the highs, I've lost a lot of faith in this. Like, I've got to have a lot of proof here because we've broken down through something that it shouldn't be doing. Now, again, that doesn't mean the trend is over. And in fact, we're still probably going to be going back to the upside given the overall strength. But the consideration here is that when they start making it back up to the highs, I'm now thinking, hey, if I start seeing, potential resistance at L3, L4, L5, the usual points where the market reverses off of, at bottoms and tops at least, then I may want to keep my eyes open. This could end up being, this might be the top. This might be the bottom. This might be, depends on the situation. So as we continue this further forward, we can see that the market does, in fact, trend back to the upside. And when it starts getting up to here, like right here, is where a lot of traders are looking at this thinking, okay, we've got the good continuation up. We had the attempted break below the previous swing, and it was a failure. The market is staying above these lows. The trend is still technically intact. It's still saying that the market should go further up. That hasn't necessarily changed. But again, because of this new low that happened over here, it gives us an idea that, well, I don't really necessarily have to believe this rally up. That's great that it looks strong, but if I start seeing some signs that, I might want to become a seller or lower highs or some reasoning behind a potential failure, it might make some sense, especially when the market finally does make it back up to the highs. Because what is the overall objective for every trend trader on every pullback? They buy the dip, they go back to the top, right? That's their objective. Now, they may have runner targets above the highs and 2-to-1s and all that fun stuff. But everybody's objective is for the trend to continue, which means that it goes back up to the highs. Well, we just saw a breach in that trend. We know something is wrong. This is not A-okay, right? We've got some issues. Then to take that further, we see the market rotate back up and complete the objective back to the high and immediately reverse back to the downside. We're starting to see those fears come to fruition. Now, if we end up seeing the market running into resistance here again and failing off, now we're seeing some problems. There we go. Oh, wait a minute, right? Now we've got some issues. We're whipping back and forth. We're clearing above it. We're jerking all over the place. And now we're treating it as resistance again. Now, in terms of this back and forth, this looks like it was likely due to news, but the overall concept is still the same here. This level, even through all of this whippy, sloppy, chop and slop back and forth stuff, is still creating the barrier of support resistance. And when we finally break a way out of this, likely going to have to break above the high or the low here as far as confirmation goes, that's going to give us an idea that the trend may be potentially closer to over. And the next time it goes up, we start seeing a double top, starting to pull down a little bit further. Here again, this doesn't mean that the trend is necessarily done, but we've already seen some problems. From a confirmed swing standpoint, if we go backward a little bit, we remember that this was kind of that break. And that breakdown, that reversal, or at least the attempted reversal, shows that the bulls have lost their grip at least a little bit. When they start rotating back up to the highs, it's all eyes on the bulls. The spotlight's on them. Can they hold it? Can they hold it up here? Because, well, I mean, this was that's their dip. If they were going to reload and they were going to take profit, it looked like they were going to fail off of it, jerked around a little bit, but now we're seeing some problems. We've got double tops into lower highs and a big slide down. So if the market does come back up to this area, that's going to be treated as a zone of resistance that will likely see some potential pushback off. And if we push this a little further forward here, it didn't quite hit it, but you get the idea. The market rotated back off of the inside swing, and we're seeing it start to kind of run back down. And this is more idealistic of a correction. We're back into correction territory here. This is no longer a trend unless you zoom into a really short-term perspective. This was a short-term trend, but from the bigger zone that we're looking at, realistically, what have we done? Right? We're not making those higher highs, higher lows, clean movement all the way up anymore. We had that dip, reversal down, then we made a move up. Now we're getting double tops, lower highs, new lows. This was the precursor to everything. This told us that something was potentially wrong. Now, from an Elliott wave perspective, if you look back a little bit further here, you can also utilize Elliott wave in saying, well, if we've completed a 5-wave impulse, then we're likely in a corrective phase. And until we see that 5-wave impulse begin again, at least by wave 3, then we're still likely in a corrective phase. And if you can't find an impulse, you're probably in a corrective phase. The same mentality kind of holds true here, where if it's just obvious the market's not doing what it has been doing before, you're probably in a correction. The correction might be really wide like we've got here. I mean, this thing was whippy crazy nuts. But still, we're still sideways. It's still chopping and slopping. By the time we actually had that potential move down, the sellers failed. But that gave us the precursor that this trend is potentially starting to run out of steam. We roll all the way back down to the lows, and now we have a new high, down to a new low, up to a new high, down to a new low. We've got a megaphone forming now, and this was the precursor to everything. This gave us the heads up over here. Now, when the market starts churning back higher, what do we expect from a range? From a range, usually, if the preceding trend going into the range was bullish, the buyers will have the emphasis. Here, they attempted to break underneath the lows of that range. They tried breaking underneath the previous swing. They're doing the same thing. We broke underneath the last swing, higher low, reversal up. We're breaking underneath this last swing, trying to get a higher low and maybe a reversal back up. Just because this looks incredibly bearish to the downside doesn't mean that the sellers have taken over everything. All this means simply is, well, we're still in a corrective phase and we're just going back and forth in a larger megaphone. There's the higher low. There's the transition back up. We're still in a sideways cycle. Now, we are beginning to see, once again, these short-term trends are lasting fairly long, and that's something to pay attention to, where this move down, very nice continuation lower. If we look at the other side of things, we've got a potential very nice continuation back up, as a range should do. And remember, the preceding trend was bullish going into this. So the buyers have every reason to be buying down here, because we know that the overall trend from before was done. Now, if we're looking in the shorter term trend, if we're going from those confirmed swings, we've got a very obvious confirmed swing high, low, confirmed swing high and low. The high point actually ended up being inside here. And they didn't break any of these swings until all the way down here. So we really didn't have anything until over here. And now, again, we're stuck. We've got to either get something like this, or we've got to go all the way back up to the highs again. These swings are getting so far apart now that the market's going to have to really reach out and figure out what they want to do. But we do know that the preceding trend was bullish. The market rejected off of the lows, and they even came back and retested. How much better can it get for the bulls to try to cycle this thing back up to the upside, knowing that the wind is in their sails? And they roll all the way back up. Now, when we start continuing back up to the highs, what did they do? Right? They did actually make a new high. They went from a new low to a new high to a new low, all the way back up to a new high. Unbelievable. So the overall back and forth nature that we have here is really telling us that we still don't have anything that's very well proven until we start breaking away a little bit further higher here. There we go. Now we've got some continuation. Now let's look at this from a confirmed swing perspective. Remember, the last one was here to here. We finally broke above the highs, and we've created a large enough pullback to get finally a confirmed swing of some halfway decent substance that's outside of the previous major swings. So when the market tries rotating back up, we have a corrective phase. They're not breaking new highs. They're not breaking new lows. We're in a wedge, and we break down. Well, from a trend perspective, we have a lower high and a lower low. Now we have a bear trend. That doesn't mean that the market can't go screaming back to the upside, but that is giving us a clue that once again, if the market does return back up to these highs, to be weary, because we've seen this trend now break. I've lost my faith in the bulls, but I still want to see them try and fail. That's where we get the better opportunities. And that's really what you're looking at in terms of figuring out, are we trending or correcting? And confirmed swings are one of my favorite ways to figure it out. If we're still seeing higher highs, higher lows, then we're in a trend. When that trend breaks, that doesn't mean that it's over. That doesn't mean that the top is in doomsday event and everything's going to fall apart. But it tells me to distrust the next move until we get more proof. And that's really what it comes down to in terms of getting the wind in our sails. If we're looking for a short, disproving the longs, or distrusting the longs rather, is a really good start, especially when you can start stacking some other things. Hopefully you find that useful, interesting, entertaining, and something you can add to your tool belt. Of course, if you have any questions, feel free to drop those in the comments below or shoot me an email, jhb@ssftg.com. Until the next one, we'll talk to y'all later. Thanks.